All right, in this lesson, we're going to look at the sales discount or the purchase discount for the customer and how that would affect the journal entry once we sold product to our customers and how do we account for the discount. So we're going to walk you through those entries just like we did in the last lesson from the customer standpoint. Here, we're going to look at it from the vendor or the seller's standpoint. So technically speaking, there are two ways of reporting just like the customer. On the vendor side, we still have the same thing. We have the gross method. We also have the net method. And the when we use it is dependent on what that customer tends to do or what most customers tend to do with the credit terms. Remember, credit terms is a discount for paying within a short amount of time so that we can get our customers to pay us quickly so that we can then take that capital and then reinvest it in more product or reinvest it in some other investment options. So the gross method is used when the company reports the expected amount due, assuming that the discount will not be taken. So we're assuming that customers are not going to take the discount. Therefore, we're going to report what they owe us based on what we sold them. So in this case here, a sale has been made. So when the sale has been made, we'll debit the accounts receivable for the amount that we sold it to them for. And we'll also credit the sales revenue. That revenue is going to be based on how much we sold it to them, assuming they're not going to take any discount. Then they can decide at that point they are going to take the discount. And if we are using the gross method and they take the discount, we have to do a couple of things. We're going to receive the cash. The cash that we're going to receive is going to be everything that they owe us minus the discount amount. So we're going to have to plug in a discount amount. So we're also going to debit sales revenue by that discount amount because we're going to reduce our sales revenue by the amount that they are getting a discount of. So if they're getting a $20 discount, we're going to debit sales revenue by 20 to reduce sales revenue by that $20 that we did not receive because the customer decided to pay us early. Then we're going to credit accounts receivable. When we credit accounts receivable, we are crediting the full amount that the customer should have paid us, but because they paid us within the discount period, we are going to extinguish that amount that they didn't pay us. So we want to credit accounts receivable for the entire amount that they should have paid us, but didn't because of the discount that they took. The other option is they don't take the discount. And if they don't take the discount, it's simply just the amount that they were going to owe us. So we're going to reduce the accounts receivable because they no longer owe it to us. And we're going to debit the cash for the full amount that they owed us from the sale. So that's kind of the gross method. Again, the two major entries are going to be the first one and the third one. The middle one's only taken by those companies that actually are going to take advantage of the discount. And in this scenario, we're expecting that customers will not take the discount. Okay. Now moving on to the net method. The net method kind of works just like the net method on the customer's side. In this case, the company reports the expected amount due, assuming that the customer will take the discount. In this case, when we make the sale, we're going to make the sale assuming they're going to take the discount. So we're already going to reduce our sales revenue by the amount that we expect to get paid, assuming they're going to take the discount. So in this case, we're going to debit accounts receivable for $980, let's say, and we're going to credit sales revenue for $980 instead of $1,000 because the customer expects to get that 2% discount to reduce their balance because they're going to pay us within 10 days. Now, if they do pay us within 10 days, then we will just have an entry that basically gives us the cash and reduces how much they owe us. So we're going to debit cash and credit the accounts receivable. Now, if they decide not to pay within the discount period, because we already baked into the sales revenue how much they are paying us based on taking the discount, they've decided not to take the discount, so we're going to have to make some adjustments. So in this case, we're going to debit cash for the full amount they're paying us, including that amount that they're paying us for not paying within the discount period. We're going to reduce the receivable by the amount that we expected them to pay us, assuming they would have taken the discount. And then we have this extra amount. The extra amount goes into interest revenue or other revenue, depending on how your company views it at the end of the day. Interest revenue does make sense because basically they're taking an extra 20 days to pay you on a 30-day net policy. So that 20 days is basically they're paying you extra for interest, for borrowing extra money because you were willing to sell the product with the discount all along because you decided to use the net method. You're just assuming that they're going to take the discount, but they didn't. So that extra money becomes interest revenue or other revenues, depending on how you're going to put it in your books. Now, unless otherwise told, again, you're going to be using the gross method instead of the net method. It just makes sense practicality there. And if we have to make the adjustments for them paying within discount period, it's super easy to do it and not have to remember, oh wait, this includes that discounted amount. So that's kind of what you're going to be using for the rest of this term. So that is a look at sales discount using the report, or how do we report those credit terms on our books. If we are selling the product to our customers, we're going to either choose the gross or the net method, but most often we're going to use that gross method. So hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or clicking the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.